So it sounds like your base case then is that this year going through Q3 is just going to be bloodshed in every risk asset.
Yeah, I don't like it. I mean, this also is like, you guys are probably like, oh, nice, Quinn, here coming on the show talking about stocks down 10% and Bitcoin's down whatever, 30. Very amazing timing. I've been telling investors since late December and early January through all our communications have been very bearish, and we've been pretty much out of the market.
Not a dividend.
It's a tale of two Quan.
Now, your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
I like that ETH is the ultimate Ponzi.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, you got Tom, the DeFi maven and master of memes.
Hello, everyone.
Next, we've got Robert, the crypto connoisseur and czar of Superstate.
Good afternoon.
Next, we got Tarun, the gigabrain and grand poobah at Gauntlet.
Yo.
Joining us today, we've got special guest Quinn Thompson, master of macro at Lecker Capital. Welcome, Quinn.
Thank you. Great to be here, guys.
Awesome.
Master of macro is a good
We
title.
are master of macro, indeed.
I gotta say
we've got a
that
macro special episode today. Yeah, go ahead.
this is the first time I've seen a macro person whose background is Felipe Pantone.
Got a little bit of everything. Pudgy penguins.
Yeah, like exactly. You got like penguins. You got Felipe Pantone. This is not your traditional
range. That is
macro
range.
person. Yeah.
Maybe
Respect that.
the
Respect
audience,
that.
the crypto audience will, be more welcoming.
That's good. You got your street cred. So I'm Asib, the head hype man at Dragonfly. We are early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So guys, it's been an absolutely brutal week, and that's part of the reason why we wanted to bring on Quinn today to have a special pseudo emergency macro episode. So we've alluded some to what's going on in the broader economic environment, but everything has been whipsawing so much over the last few weeks that we thought, hey, we should just try to get everything out of the way, talk about what's going on in the news, what's moving markets, and just what we think is going to be the vibe going forward under this very new economic regime we seem to find ourselves in. But I want to start by going through some of the news. And part of the news, which is, again, kind of going against the grain of crypto really struggling over the last week, is this really positive news we've gotten on the legal and regulatory side. So first and foremost, we talked last week about the strategic Bitcoin reserve that Trump tweeted out. It was vague. It was very unclear exactly what he meant and what he was doing. Supposedly, it was going to include Cardano, XRP, Solana, as well as Bitcoin and Ethereum. So we now have more clarity because Trump actually established the Bitcoin reserve as well as a quote unquote crypto stockpile via an executive order. Now we have a lot more clarity about what exactly we're talking about here. So here's how it's going to work. So first and foremost, we have a Bitcoin reserve, and the Bitcoin reserve is special. Bitcoin is a permanent reserve asset, meaning that it is not going to be sold or rebalanced or anything. They're using the seized Bitcoin that the government already has on the balance sheet, which is about 198,000 Bitcoin. So this is basically like, what is it, $16-17 billion worth of Bitcoin that the government currently owns on the balance sheet. And supposedly they're going to try to acquire more Bitcoin using a quote unquote budget neutral strategy. So the Treasury and Commerce secretaries have been tasked with trying to find ways to, I don't know what exactly that means, fudge the numbers or sell other things to buy more Bitcoin. Okay, so that's
borrowing.
I doubt it's borrowing, but we'll see. So that's the Bitcoin reserve. Then there's a digital asset stockpile. So what is the digital asset stockpile? These are the non-Bitcoin assets that have been forfeited to Treasury. So these are also through criminal seizures that are just sitting on the government balance sheet. Now, these may be sold or may be rebalanced. Right now, apparently, the government owns some Ether, and they probably own some other digital assets, but right now, it's actually not clear what the government does own. And so they were also tasked with doing some kind of audit to understand what does the government currently own, so that it's going to be seeding the digital asset stockpile. But the digital asset stockpile may be rebalanced. Things may be sold. There's no commitment that we're going to, buy and hold these things forever. Now, there's been a lot of discussion about, okay, how do we all feel about this? Some said that it was a symbolic move. Some said that this is concerning because it may be reversed by future presidents, being that it's an executive order, it's not a permanent law. At the same time, many people said, look, this is great. This is what we wanted. This is one of the things that we criticized in the previous show, is that what are all these random assets doing in a crypto reserve or whatever. Now it's very clear. Bitcoin special. Bitcoin's going to be sitting over here to the side. Then we also have this digital asset stockpile that's more amorphous and is probably going to be significantly smaller, judging from the current state of things, than the strategic crypto or strategic Bitcoin reserve. So that's the state of play as we can see it right now. Markets were down when they saw the announcement of strategic Bitcoin reserve, under the assumption that, well, hey, we were excited that the government's going to buy Bitcoin. Now we know the government's not going to buy Bitcoin. It's going to hold the Bitcoin that it currently holds on the balance sheet, but there's no net buying pressure, presumably, unless
Well,
we
not
find some weird
selling.
jujitsu
Not
to do.
selling is the same pressure as
Yes. Well, so in principle, yes, that should be true. That saying that, hey, we're not going to auction off these tokens, and which is normally what the government does when it has Bitcoin on the balance sheet, that should be good because that's allaying future selling pressure, but it doesn't result in buying pressure today or in the near future. And that's what markets seem to have been responding to. So overall, I saw mix of responses. Some people disappointed, some people happy and excited. Nick Carter, I think, was very positive and said, yeah, this is exactly what we wanted to see, which is Bitcoin special, treat Bitcoin as its own thing. Anything else is kind of subject to future discretion. How did you guys take it, seeing the story of digital asset stockpile plus strategic Bitcoin reserve?
Well, the headline, when it first came out, I was actually extremely excited about, as were most people who I think saw it, because when you zoom out, this is a moment that we've been waiting for 10 plus years of Bitcoin being the topic of conversation. The United States government saying that they want to hodl Bitcoin is a big deal, right? And it's crazy that the magnitude of this announcement was dwarfed by the short-term focus on like, oh, there's no buying pressure. And so I'm still sort of enamored by the fact that we've gotten to this point, and I think it should be applauded and very excited we're here. I think there's risks, right? A great example being this is done by executive action, right? If there's a different president in 4 years, this could be undone by executive action. This is not codified by Congress. This is not like a long-term institution that will survive through multiple administrations. Like in the same way that we've gotten this through executive order, like we could also lose it by executive order. And so I think it's an incredible first step, but I view it as that first step.
Quinn, what was your reaction?
Yeah, I think I'm generally aligned. I think everything was priced in. So I can't recall a large anticipated crypto positive event that wasn't a sell the news. Just everybody is over their skis. We know people in crypto like to use leverage, and leverage, if you're buying coins or a house, it's pulling forward future demand that then needs to be digested or worked through. So I think it's positive. I don't really understand the takes that people are disappointed with the Trump progress thus far and the administration. I think they've fulfilled on just about everything. And I mean, most probably important is just the declawing of the SEC and really letting innovation and builders run free. So I think I agree with Rob. It's big win. Need to see things get passed. It's obviously probably going to fall behind in priority relative to trade, tariffs, immigration, taxes, but hopefully they can get some of these things through the budget and just parts of legislation.
Tom, what was your reaction?
Yeah, I think Bitcoin Reserve was great. I agree. I mean, I think there's risk around a narrative lapse that they are spending your tax dollars to go buy Bitcoin, which is something we absolutely don't want and don't want them to do. But it dramatically shifts the Overton window in terms of what is Bitcoin. And I think where the US goes, so many other countries follow. I mean, there was just a story a year or two ago about Germany selling much of their Bitcoin, and I wouldn't be surprised if other countries follow suit. And this seems perfect. I thought the digital asset stockpile was very strange. I mean, I think we kind of nailed it on the last show that they just went through like the top assets and
wait, not we. You
I
actually
nailed
got the
it, but
prediction
it's part of the collective brain.
It.
Well, but then Sachs was on TV saying, "Oh, we don't actually know if we own any of these assets," but and then the stockpile isn't even. We're not going to sell them. We're going to have a stock. So that felt kind of like a no-op, and I felt kind of got everyone in this kind of. I got everyone all riled up for really no reason. So you got to take the good with the bad. But I agree. It'd be nice to have this codified into law versus just an EO. But you take what you can get.
How would you guys feel if they said one of the budget neutral ways they were going to acquire more Bitcoin for the reserve would be to sell any confiscated non-BTC assets and convert it to Bitcoin? What would be that vibe?
There's a lot of budget neutral things that could be done, right? Relying on confiscation, I view as the wrong approach, simply because do we want to live in a society where, the reserve is created by taking things away from people as opposed to being net new in some way?
Yeah, I did see some good memes going around like the way you get your token into the digital asset stockpile if I have someone do some crimes with it. And so, I would be surprised to go see.
No, I will say that the not financial advice is if you could go long Thorchain volume, if that's true, because people will just sell to Bitcoin automatically. No criminal wants to hold this stuff that'll get sold, to be honest.
Wait, are you also alluding to Thor because they've been a faucet for
all of the North Korea exit
Yes.
money into Bitcoin?
Right, but will Thor wind up in the stockpile?
That's above my pay
They have to
grade,
have
I
a
don't
working
know.
chain, right?
Yeah, they have to have a working chain. Well, it
mean,
clearly
at the end of
was
the day,
working. It was working. They got
it
through.
worked very well. It worked very
maybe
well,
too well.
unfortunately. Yeah, but I'd say, it already is the case that the majority of criminal activity tries to go into Bitcoin anyway. So, and
I think this
ironically,
would
like, a
just
lot of
make it
what-
100% go into Bitcoin.
Yeah, exactly. And I think, ironically, like the only other asset that maybe they're going to be seizing is Tether, and so they're going to be putting Tether in the.
I saw some.
Does that count?
I saw some XRP army people who 4chan frog level XRP army people whose kind of conspiracy theory was that the US put XRP in and ADA in because they've been confiscated by many criminals, and that's why they're real money.
ADA has?
And I was like, are you guys just making this up? Yeah, no.
Yeah,
This was like some like
that would mean that Hex is really at the heart of the Bitcoin.
I don't think they've
Reserve.
confiscated any
Stockpile.
Hex. No.
Right, they dropped the case against Richard Hart, right? So,
well,
yeah,
also
that's fine.
didn't he himself went all into DAI. That was like the funniest thing when he
Right,
sold. He
right.
got out of his Hex and went 100% to DAI. So
Yeah.
So David Sachs, Cryptozar, did go on TV and basically say, "Look, I think the market is overreacting to what Trump truthed or posted on Truth Social, which is him saying that there's going to be Cardano and XRP and Sol in the reserve." And it was kind of like, yeah, why are you guys? Why would you assume that what he writes is correct? That's a crazy thing for you to do. So we got gaslit a little bit about, hey, how should we be interpreting things that are coming out of not even the administration, but the president? So there's no longer, it's sort of been unconfirmed, despite being confirmed by the president, that there is necessarily going to be these 5 assets in the digital asset stockpile. We now no longer are sure what's going to be in there. And it's basically TBD. Apparently, I think it's going to be up to Besant, right? What goes in the stockpile, something like that. So we now just have a slush fund of tokens that we're going to hold on to and decide when to sell. So it's funny because as crypto punters, which I'm sure many people in the audience are just out there buying, selling tokens. Like now the government is right there with you, like deciding when to sell random shit coins that it's accumulated. So it's no longer like this staid institution that's just, okay, we automatically sell everything we get. It's going to be like, this chart looks good. I feel like there's this breakout over here. I have no idea how to even pretend to be saying.
I did see a lot of like sad NFT people who were like, oh, why isn't there a strategic NFT reserve? And I'm like, are you guys kidding?
That would be amazing.
Okay, what collections do you think would make it to the strategic NFT?
Trump coins or Trump trading
Trump
cards
NFTs,
yeah. Trump NFTs is probably number 1. And then Melania never did any NFTs, did she? Otherwise, that'd probably be
Didn't they all do like?
I think there was an NFT a long time.
I think
ago.
there was one. Yeah, it didn't. I don't think it was like popular. Melania's digital assets have always been down only. So
yeah. Okay. So just sense of perspective. U.S. government now formally owns and recognizes Bitcoin on its balance sheet. What do you think that means for other countries buying Bitcoin? Because that's always been the argument, is that now that the U.S. government, which is of course the large Treasury owns an incredible amount of assets. Obviously, all the gold in Fort Knox is well, some of it belongs to Treasury, some of it they own on behalf of other countries. What's very clear is that there's a lot of controversy around the strategic Bitcoin reserve and the way that Trump has been approaching digital assets in his administration. Do you think that other countries will say, "Oh, well, great, the U.S. owns it now, so I should own it too, and it's time to join the club, and I don't want to be late"? Or do you think other people are going to look at this and say, "Well, Trump's being an asshole"? If you're Germany, you're like, well, Trump's like starting fights and picking on us, and now clearly we kind of have to go it alone. Do you think that other countries are going to look at this and say, no, I don't, like, now it's like this MAGA coded asset and I don't want to own it. And actually, if I buy Bitcoin, people are going to think that I'm following America and I don't want to do that, right? It sort of almost now colors Bitcoin with geopolitics. What do you guys think? Is this paranoid thinking, or do you think that there's an era of this now in the way that Bitcoin is going to be perceived?
I think I've been thinking about this as well. There's an anecdote back. The Bank of England sold. They're the largest holder of gold in the world. In the late 90s, they sold half of their holdings, and it was the Pico bottom. And I made a tweet that was sort of playful, but just hinting at the idea of government involvement in your asset class might have opposite effects. I don't think really that's the case for Bitcoin, given its adoption elsewhere, but there is that risk that it is almost co-opted as, for the same reason we believe in Bitcoin as an alternative to holding US treasuries or a store of value or this new digital gold. If it's viewed as the like US state sponsored store of value, does that, move it one notch closer to treasuries or dollar, which is really what everyone's trying to get away from anyway? Like if we are indeed obviously it catalyzes purchases if people know the US is actively going to be acquiring new Bitcoin. But other than that, there is the chance it could be a deterrent for some.
Well, I think it shows the incentive of America to stand behind Bitcoin. If Bitcoin is owned by the United States government in size, right? And again, $18 billion worth is not size when it comes to the US government or big geopolitical strategy, right? But if it is going to be owned by the US in size, it shows a commitment to the asset. And it shows that it's being taken seriously as an actual strategic lever. Now, we're not at that point. Honestly, I don't think the Bitcoin that's currently in the reserve is enough to truly inspire other nations. But if there were more Bitcoin there, either because the price goes up a lot or because there's budget neutral ways to add to it, then I think the calculus changes.
I want to add one other thing, which is not quite Bitcoin related, but it is related to this point of other countries copying or following, which is that there was EU Security Council meeting like today or yesterday, and basically they were like talking about how like, hey, the US is making crypto more legal. This means that USD stablecoins will be pushed onto Europe, and like we need to figure out how to do cryptocurrency stuff ourselves effectively. So I feel like the message has gotten across. Let's put it that way. I feel like that but I think people are more afraid of stablecoins than they are of the Bitcoin holdings, if that makes sense.
They're only about 5 years too late on that. Per usual,
it's Europe.
Right? Yeah,
so,
exactly.
Like, come on. Like, let's be real.
I do think, I agree with, I think a lot of what's been said. I do think there can be a sort of reverse Minsky moment that kind of pops up faster than you expect. And then everyone's like you said, has this FOMO, and even sophisticated players. And I would say, honestly, the ETF approvals kind of remind me of this a little bit, where you had all these players who had never been interested in crypto or only loosely interested, or maybe you're actually very anti-crypto, all line up in very rapid sequence and file ETFs, or JP Morgan very, very famously very anti-Bitcoin, and then became one of the first authorized issuers for Bitcoin ETF. And so I think there can be this momentum where when you look around, you get one neighbor, two neighbors, three neighbors all lining up to, if not buy Bitcoin, have a similar approach or philosophy or legitimization. I think it can really kind of snowball quickly.
Okay, well, so putting the Bitcoin story aside, let's talk macro, because of course that's the backdrop to all of this conversation, is that macro has been absolutely fucking awful. So, of course, a lot of this has been instigated by the Trump tariffs and the trade wars that he's now instigated against Canada, Mexico, the EU, or threatening against the EU, and of course, against China. So, right now, what we've seen so far is that crypto market cap over the last 10 days is down almost 20%. We've shaved off roughly on the order of about $1 trillion from the top of the market. And what you see in the S&P 500 is that just yesterday, March 10th, the S&P posted its worst day since 2022, erasing $1.4 trillion in total market cap in a single day. NASDAQ was down 4%, and we've had multiple days now of just back-to-back losses, basically over fears that Trump is willing to potentially allow the U.S. to enter into a recession. So the statement overall from the administration has been, there's going to be pain. There's going to be a readjustment of the economy. And he essentially is willing to put on arbitrary amounts of pain, is the message that markets are more or less hearing, in order to, one, basically recraft some of these trade relations with U.S.'s neighbors, both Mexico and Canada. It seemed originally like, okay, this is about fentanyl. And so if he can extract these concessions from Mexico and from Canada, and of course the immigration issue between the US and Mexico.
Fentanyl is just a way to justify using executive order versus going via Congress. It's an emergency.
Look,
you have to read the order. It says that.
Yeah. I obviously agree with you, because at this point, the immigration from Mexico to the US has dropped 90+%. So any concern that like, hey, this border problem was not under control, it's under control now. Trump has unequivocally accomplished that goal. And there's all these reporting. I was reading a report in the New York Times talking about how the drug cartels are absolutely in shambles. And basically there was Mexico carted 25 drug cartel leaders to the United States to go basically.
Well, if you notice, Trump never says anything bad about Scheinbaum, whereas he loves making sure he takes punches at Trudeau.
I have noticed that. So overall, the picture that you get is that initially people thought once he gets the fentanyl stuff, once he gets the border stuff under control, this is all going to be over and we'll go back to free trade and making money and getting rich together. And now it doesn't look like that's the case. It looks like, no. This is about fundamentally recrafting trade relations and undoing a lot of this globalized supply chain stuff and not just friendshoring, but completely home shoring, onshoring a lot of the manufacturing and trying to bring manufacturing back in America. Now, I've been on record as saying that I think this is a little bit crazy, but the story right now that everyone's hearing from the administration is that they're okay pushing the economy into recession. And they're okay. Obviously, they're pushing Canada and Mexico into recessions because they're much more export driven than we are import driven from them. But, Quinn, I want to get your take. First of all, how do you read the economic moment? Do you think we are going into a recession? Right now, Polymarket is pricing, there's not a lot of volume, or liquidity, so you shouldn't read too much into this. But Polymarket right now, since about 2 weeks ago, recession chances have been skyrocketing from initially 20% in mid-February to now 40% likelihood of a recession. How do you read the economic tea leaves right now?
Yeah, I think for me, it's helpful to rewind a bit and start with the outlook and environment going into, let's just say, his inauguration. The last year of the previous administration basically tapped dry every possible stimulus, liquidity. Basically, the economy was on fumes. It was almost 100% of the job growth in this country for the last year plus has been government related or government driven. So the private sector has been in a sort of a recession. Small businesses across the country have been quasi-recession for a bit. And part of that is due to trying to win an election last November and also just timing of when some of these liquidity facilities like the RRP ran dry. So Besson and team, I'm not that old, but it's the most markets focused presidency I've ever heard of. They are doing everything with markets in mind and the economy in mind. And they knew the pain or the risks on the forefront with equity valuations at all-time highs, the US dollar where it was, everyone kind of praying for the moon still, while under the surface things were really weakening. And so when you go into that, you sort of have two choices. Do we take the medicine ASAP, where we can hopefully have time to heal pre-midterms, pre-2028, and then also blame it on the Biden administration, or do we try and massage or smooth over? And I think the majority of past presidents probably might have taken the play it a little safer and smooth, and they're clearly choosing violence, which I don't think anyone quite realized they would go this hard. The thing is, though, I would say the economy and the markets become very reflexive, particularly in downside scenarios. So I do think just the fact that we're talking about macro on a crypto pod usually occurs probably near bottoms for the market, at least local bottoms. So that's one. But
Is this
two,
financial advice?
Yeah, is this a local bottom?
I mean, we're within an area most likely, but the other side of it is
I will say the Paul Tudor Jones buys Bitcoin news articles are often very well timed with the bottom. So.
Yeah, he's good. He's good.
All right, Paul, if you're listening, let us know.
The reflexivity where can be where things could go awry. If let's say the S&P, this is the first 10% plus drawdown in over a year and a half, basically. If that starts to get to 15 to 20, it's very reflexive in the sense that, okay, we already had some of these companies coming out saying their confidence and outlook is very uncertain. That affects hiring, the amount they want to reinvest. And so you create this self-reinforcing thing that can be reflexive to the downside, where 20% dip without stimulus or measures to kind of support business confidence and activity can then create a bigger problem. So I think that's the risk they run. I personally believe that sort of situation does occur. I don't think this is the big crash or I do think we are in the realm. Maybe it takes another point or two on the S&P where they start massaging markets up, where they've been massaging markets down for the last number of weeks. But I think what they need to do in order to get through some of these tough changes is sort of a stair step down, where it's okay, we're down 10, up 5, down 10, up 5, without things really unraveling. Because if things unravel, the tax revenues get hit, deficits actually widen. They have to utilize more liquidity, more stimulus, which is inflationary and puts the government in further debt to get us out of a bigger hole if they really send things reflexively down. So I think it needs to be a bit more massaged. But when you try and run these controlled burns, there's always the risk that things get out of hand. So that's kind of how I'm seeing it. And I think people are waking up to it. And, that's why it's finally not just crypto getting hit for once. It's quite across the board.
So hold on, let me make sure I understand. What exactly is the theory of mind you're ascribing here to Trump? What is he trying to do? And what is he accepting as collateral damage? And what sort of, he didn't wish this were the case, but it just seems this is how things are happening.
So the problem that we were basically running the economy too hot for the last few years, which was being propped up by more and more fiscal stimulus, higher government debt burdens, and then how normally that's a problem. If the government spends 6% budget deficits, that needs to get monetized somehow. And we were seeing in the last 2 years problems in the U.S. Treasury market, in the sovereign debt market, where we were having these yield tantrums where interest rates would rise on the long end of the curve enough to kind of cause problems in asset markets and housing. And that was due to such high levels of government spending, where they call them the bond vigilantes, were saying, all right, we don't want to buy your debt anymore. Yields are going to spike. We're selling these assets off. Foreign holders, Japan, China, the two largest holders of the government debt, were saying, look, what you guys are doing fiscally is irresponsible. We're out. And that was sending yields higher, and then that's negative for the markets. Bessent, being the renowned hedge fund manager he is, knows this problem through and through. That's why his largest holding going into the administration was gold. He's definitely been shorting treasuries, which is the number one asset he has to now sell to people. And the way to do that is get growth down. To get interest rates down, to get yields down, they need to slow growth. And that's tough, right? Because slowing growth means higher unemployment.
Wait, hold on. So are you implying that the reason why he's starting these trade wars and creating tariffs is to slow down growth?
To justify a 0% interest rate again. I feel like that's what you're trying to get at, right?
Because that's a very different claim than what Quinn is saying. Like, that's causing a financial crisis.
They're related. The trade wars is to help let's say, a side effect of propping up the markets with government spending over the last few years and the way the Fed went about monetary policy outsizedly benefit the upper and upper class and high earners at the expense of the low income small businesses across the country. So large cap tech, that's why we've seen the bubble in Nvidia and the Mag 7. Meanwhile, small caps are in the gutter and they haven't broken new highs since 2021. That is a direct result of how the Fed has conducted monetary policy in tandem with the Treasury throughout the Biden administration. And in order for that to be fixed, for Main Street to get a little back on level footing, they need to reshore, bring jobs back, weaken the dollar, and kind of take away some of the things that have benefited the equity market so profoundly over the last few years. So
okay,
it's a rebalance.
Let me push back though. Let me push back though, right? So you say, okay, so this is the story, this is the narrative has been in that it's rebalancing the economy. But what you're describing is reducing the amount of government spending and the amount of government subsidized jobs or direct jobs on the government dime. When Doge was going out, firing a bunch of people at USAID and at the IRS and so on, markets were going up. Right? Markets were actually fine with that. They don't seem to care that there's going to be, okay, lots of government employees seem to be losing their jobs. Markets were cool with that. It's only the tariffs and these trade wars that are now causing markets to freak out. And I have not heard you actually use the word tariff yet. So how do trade imbalances and tariffs and bringing back manufacturing, how do these play into your story here? Because like if that's what you're doing, just fire everyone in the government and tell everybody that, hey, we're massively decreasing government spending. Wouldn't that do what you're describing? Why the trade war stuff?
The trade war stuff is, so Trump's, one of his core strategies is do a million things at once. And the media, you will hear some journalists in newsrooms and media companies talk about how it's impossible to keep up with everything he's doing as a tactic to not get drilled on anyone. You know, we've seen what the media does with him. So it's part of his strategy. I strongly believe tariffs, they are, debates whether they're inflationary price-wise, probably in the short term, but potentially deflationary because it brings down growth. I do think that is a prong in the strategy. However, the core reason the markets are puking, in my opinion, is weaker growth on the back of Doge and the cuts. I think, I mean, if you look at returns since...
Hold on, then why would it happen when he announced these tariffs? Right? Because Doge has been operating for months.
I don't think people, I mean, if you
So
look at when his inauguration...
Doge, this has nothing to do with tariffs.
But I don't even think it's that delayed. I mean, if you look at the market returns from inauguration, 109 BTC to now, stocks down 10, I think it's pretty aligned. I think people overemphasize the tariffs. Yes.
Well, the days of the tariffs. Yeah, it's like within like 5 minutes. It's like...
Yeah, as soon as tariff news happens, markets are whipsawing like crazy. Yeah, exactly.
That's an uncertainty thing, yeah.
I would take a counterpoint if I look at the spread between commodities and equities right now. The commodities are extremely sensitive to tariffs, right? Like you saw the corn down like 10% today, or whatever, because
I was
everyone
watching
thinks there's
corn
going to
prices
be
very closely.
Corn is going to get crushed. I mean, I used to trade commodities, so
all my corn alerts were going off like crazy.
I still have my tendencies to look at, you know.
Do you actually check corn prices?
I mean, I check like the top 10.
Like corn,
no,
not Bitcoin. Corn. Okay,
corn had a huge,
legit.
horrible day today, mainly because everyone thinks like corn demand outside the
Do you
U.S.
follow
Like U.S. is a big
frozen
exporter.
Corn Twitter's in shambles right now. Unbelievable.
Corn is down a lot. Obviously, eggs going up a lot has been a political.
No, eggs down. Eggs
cudgel.
down now. Eggs down.
Eggs down now.
Eggs
Yeah.
down.
But egg going up was a thing. I just only think like if you look at the
sidelines,
The shopping block commodity podcast.
No. The spread between
what's the spread between corn and eggs?
No. The spread between the crash in commodities and
the
equities.
Spread between corn and eggs is butter.
No.
Sorry, go ahead.
All right, see, I never thought you would be a dad joke guy.
I just can't stop.
Okay,
Please,
the spread between the commodity sort of like volumes and equity volumes was like quite crazy over the last 1 week, I want to say, where like the degrossing in the highest P companies was like extremely fast unwind, whereas like the commodities unwinds were very targeted to like this particular US export is like going to get crushed. And it's sort of interesting. Crypto kind of just basically had insane correlation to like Nvidia over the last week. It was like, it outbeat everyone in terms of like how much it was viewed as like the highest risk asset if you look at sort of some market cap weighted index. So the reason I bring this up is I think commodities prices tell you more truth about tariffs than equities prices, because like those are the things that are more directly impacted, right? And so when you see commodity crashes, that's when you know it's tariffs. I think when you see kind of stock crashes, it's kind of a mix of all of these things much more. You can't like, I feel like there's much less causality. That's kind of all I was getting at.
Why on the price crash though? If commodities are being, if tariffs, doesn't that make them more expensive? Or you're saying demand is less?
Demand is like, yeah. Demand
If
from
a foreign country
foreign
puts
demand.
a tariff on us.
Yeah. The reciprocal tariffs are the reason that the commodities are crashing.
Quinn, I mean, I think a lot of people, and I feel what you were saying around like, hey, Besant and the admin overall being kind of the most markets focused administration we've had in a while, and people sort of relying on this like Trump put idea that, hey, if markets go down badly enough, they'll say something or do something to kind of revive things. Now people are kind of looking and like, this feels like a staring contest. We're going to see if Trump blinks and maybe, hey, we've taken too much medicine and we've gone too far. Do you think that's still in play? Like, where do you think that happens? Like, do you think there's room towards sort of unwinding what's happened so far? Or do you think it's just like, no, we have to accomplish the mission no matter the cost, and then we'll see how the economy plays out?
I think, like I said, it's a stair step down type of approach where they need to manage it in a massaged way that doesn't just wreak havoc in one quarter and cause an extreme severe recession. But I do think they will take their time throughout the year. I don't think it's a first quarter and done. I think they probably want to aim to have it wrapped by, say, end of Q3, like mid Q4. But the interesting thing here that I think also people might not be in tune with is the fact that actually Besant and Trump, there's a reason they haven't mentioned Powell or the Fed hardly at all, because they are actually basically on the same side at this moment in time, because the Fed has gone on hold since that very hawkish December meeting where they got scared about inflation again after those back-to-back cuts. They're likely to cut in May again because the data is deteriorating and inflation probably weakens. But in this moment where they're trying to kind of rebalance and slow growth to bring interest rates down, it's actually better for Besant and Trump to achieve those goals if Powell's on hold. And that's why, in my opinion, you haven't seen the push on them. When the market sell-off becomes a little too much for them to handle, a little too painful, and I think you're starting to see rumblings of it where now within the US, pretty much everybody knows at least someone or indirectly knows someone who's been affected by either federal layoffs or what have you. Once sentiment starts to sour, I think you will start to see Powell and Trump kind of go back at it again, because if the equity markets say get to 15% down, that probably is getting to too much pain in the near term. And then I think you see pressure on the stimulative, liquidity, supportive type measures like the Fed. And I expect to sort of push-pull on that year round. But there's a big reason why Trump and Besant haven't mentioned Powell yet. But I do think that puts there, it's just way lower than people were expecting going in.
So it sounds like your base case then is that this year going through Q3 is just going to be bloodshed in every risk asset.
Yeah, I don't like it. I mean, this also is, you guys are probably like, oh, nice, Quinn here coming on the show talking about stocks down 10% and Bitcoin's down whatever, 30. Very amazing timing. I've been telling investors since late December and early January through all our communications have been very bearish, and we've been pretty much out of the market. So it's a view I've had. I mean, maybe, and I do think there's a pretty nice bounce to be played over Q2, whether that comes this week or next week, we'll have to see. But I do think that's coming because I think they're going to have to support markets a little in the near term. But yeah, I don't love the outlook. I mean, the thing that people need to remember is, I would say, at the end of the day, Bitcoin has a lot of its characteristic is a risk asset. And obviously the rest of crypto, for sure, it's more kind of longer tail tech. And stocks going into this year were trading at peak 2021 valuation multiples, which is like a crazy all-time record and very out of the ordinary. So even a 10 or 15% correction where we're at today, stocks are still elevated from a historical valuation perspective based on growth outlook, et cetera. So it's not that crazy of price action, let's say, based when you roll back time. For the last 2 years where every asset's been up only and we buy every dip and make money on that, it's unusual, but it's very not unusual, rolling back even 10 or 20, 30 years.
I normally wouldn't say I agree that much with Balaji tweets, but he had a tweet.
I agree with
today
his tweets at least
about
20% of the time.
Yeah. Okay, I think that's maybe I'm in that range. But he had a very good tweet today about this, like the fact that like all of these actions are just like they're like the right symptom that you're trying to cure, but then you're kind of like curing the wrong thing. You're like making yourself less competitive in like many ways. And like basically the argument is like that Trump sees this as a way of like making sure there's no money that goes from, obviously Balaji has this worldview of like America's two countries. They happen to have some commerce between these two separate countries, Red America and Blue America. And Trump's goal is to have Red America never pay Blue America. And this argument is that the side in the view of doing that, he's kind of made competitiveness much worse, right? Like the reason we're importing all this stuff is because it's just cheaper or better, right? And the idea of like forcibly trying to do everything in Red America is kind of a way of losing your ability to borrow. And I don't know, I thought that was like in my mind, that's probably the best. This feels like collateral damage of sort of someone who's hell-bent on this like one tiny thing, but ignoring all the side effects.
It seems like a really broken mental model of like, oh, this side of America imports things and this side of America doesn't.
No. But I think Trump has kind of said stuff like this. So like, I'm just saying Balaji's like maybe simplifying it, but it's not that disjoint from what I see on Truth Social.
I mean, the question I have is, how did Trump get so enamored by tariffs in the first place? Like, when did he get tariff pilled? Like, when did he
decades ago in the 80s.
He's been tariff pilled this whole time?
Yes. He's loved tariffs even way before his political aspirations, oddly enough.
Yeah, there's a lot of reporting now about how Trump has talked about publicly, tweeted, has been on interviews saying that, we're getting gypped. We have all these terrible deals. He's got this very deal setting mindset. And he thinks that, look, you win in trade by having an upper hand over your opponent. And I think it's just this kind of, it's very zero-sum mentality about trade. And, it's ironic. I pointed this out on another podcast, is that Trump clearly doesn't like trade. He thinks trade is like almost intrinsically bad or weakening or hollowing out America to engage in all this trade. And so having these trade imbalances is very negative. And therefore, we want to be using tariffs to renormalize our trade imbalances to get them closer to equal. At the same time, he's very upset about the Panama Canal, which is used for only one thing, which is fucking trade, right? Like that's why the Panama Canal exists. So if you're mad that, people are charging too much money to go through the Panama Canal, isn't that good? Because that means there's less trade and therefore we're forced to trade with ourselves. And
he's mad
locally.
Canada as a state is not a state also.
Yes, he's also mad about that. Well, so whatever. So I think
Trump's going to repeal the Jones Act in like 6 months. So, we're going to be lit. Also, let's see, you can't be saying gypped on this show. That's not okay.
Can I not? Wait, no, why not?
It's short for like gypsies. It's like the gypsies are ripping you off.
Come on.
Yeah, it's a slur.
To all the gypsies out there, I apologize. I didn't.
Tom canceling someone in 2025. Like, what is this? I thought DEI was over.
Woke culture is back. We had a good run.
Sorry, we do have a big Roma population that listens to the show, as I happen to know. So sorry to all the Romas out there.
So I asked a couple language models, when did Trump get into tariffs? Just as like a kind of different. I asked 4 of them just now. Almost all of them claim it was like during the first election. Like prior to 2016, he didn't really have that much. But like obviously, I don't know how good their training data is from the 90s or 80s.
But it doesn't feel like this came up in 2016. And like,
it did.
He did tariffs on China.
Yeah, the whole 2018 market turmoil was tariffs.
That time for sure. I mean,
he was the one who instigated tariffs on China.
Right.
Basically, Biden kept those tariffs.
Right. No, hold on. But I guess I remember that, but that didn't feel as significant.
Yeah, to be clear, the magnitude of those tariffs were much smaller than the tariffs that are now being imposed. So the market kind of freaked out on tariffs that ended up net being like a few percent of total trade with China. Now we've gone up to 10%. and he's now going to double that to 20%. And of course, the tariffs on Mexico and Canada are unprecedentedly large.
Okay. Actually, I slightly reformulated my query, and I got a interesting answer, which is there's some article from the 1980s talking about how he wanted trade protectionism against Japan, because like that was like the Japan.
Yeah, that's
was, like,
right. He used to be, I mean, Japan obviously was once upon a time how we now consider China in the US. And Trump was very adamant that we should not be allowing so much trade with Japan. They're, again, hollowing out America and so on and so forth. And so I think he's clearly somebody who's just very suspicious of trade as a concept. And I think there's no way that Besant shares this worldview. I think there's no way that people around him share this
Ludnick is
worldview.
very tariff pilled. I mean, maybe he's just regurgitating Trump points, but he's been on TV.
Was he saying this before? No, of course. It's his job. He's commerce secretary, right? It's his job to like do his job, which is to talk about why the tariffs are good and why, basically spout the Trump party line. That's his boss. Was he saying this 3 months ago?
I don't know.
No way. Absolutely no way.
I think, Robert, I think you raise a good point where you're like, we were kind of fine through the 2018 trade war. There was a lot of market turbulence. That was a bumpy year. 2017, his first year, was the lowest volatility equity market year on record. 2018, quite the opposite. It caused a lot of turmoil. There was Q4 2018, in February 2018, there was a 10% pullback. Q4 2018, there was like almost a 20% pullback. So there were real ramifications. What I would say is, though, as you kind of allude to, like, you forget about him. I think a lot of this action, ultimately, we see them stand down almost on every occasion. I think it does end up being less crazy and mayhem. I really do think it is partially a diversion tactic, because if you're his base, if you're the 3% people that elected him in, what is a lot more palatable as the reason the market's going down is, oh, he's protecting us, he's sticking up for us on the international arena, versus
do you really think people are buying this? I mean, consumer sentiment is cratering right now.
Well, what I'm saying is that's a better thing. Everybody on the show thought believes the market's going down because of tariffs, and my position is that's a much better thing internally, domestic politics wise, to have your base think than, oh, the market's going down because he's laying off the only reason the economy's grown in the last 2 years, which is all government induced jobs. So I think it's a little bit of a diversion tactic here, because Doge, like, for their main goal is deficit down.
Okay,
and the bigger thing
you are
is going to be
ascribing some very, very clever approach to basically messing with very large levers of government, right? I think it's pretty likely that Trump is doing this anyway, regardless of how much of an impact Doge is having. Doge so far has not actually laid off that many people, right? And it's not actually cut that much spending. Like, the amount of spending that's been cut is, less than 50 billion or something. It's like not significant in the context of the government overall agenda. Now, obviously he wants to cut more, but at the same time, he's also pulled back and said, look, Musk, I don't want you cutting with an axe. I want you cutting with a scalpel. I want you to slow down and be very careful in any future cuts that you're making. So I think it's not that clear to me that the story is really that, well, he's going to hollow out the government, and that's why now you're going to get a recession because of the lack of government spending, or you're going to get mass unemployment because of the lack of government spending. And he wants to now blame it on something else. Like, if anything, what's really weird is that normally, if you're going to do a lot of changes early into your administration, that's the narrow opportunity that you can blame it on the previous guy, right? Trump owns these. Trump has been on TV owning it. He has not been saying, oh, this is because of Biden. This is the Biden economy. He screwed us up. It's all his fault. He's instead said, no, I'm doing these tariffs and there's going to be pain, and, get over it. Like, all you Wall Street fat cats, like, you guys have been getting rich too long. It's time for you to stand up for America. That kind of language is basically him telling the public, I'm doing this on purpose. So I think if your base case is that this is all politics, and he's trying to deflate a bubble that he knows is going to pop, which, to be clear, I don't think that's how Trump thinks about it. I think maybe Besant, but I don't think Besant is driving this. It's clearly Trump driving. Given that, Besant is not this guy who's been saying that, trade is terrible and we need to get back to neutral trade imbalances. It feels to me like this is the post hoc explanation for what Trump is doing that has to get digested by markets. But in reality, like, Trump is just kind of operating on instinct with respect to, Canada, 25% tariffs. No, now 50. No, now, okay, back to 25. And okay, you're not being nice enough to me. You gotta thank me when you're coming into meetings. Otherwise, these deals are off the table. That that kind of it's a very different kind of politics, clearly strongman politics. And look, you might feel positively about that and say, hey, we need that in order to get back to our competitive position as America. You might disagree with it and say, hey, I think this is foolish and this is not actually in the best interest of the country. But either way, it doesn't feel to me like there's this, okay, well, he's secretly doing this because he knows that markets don't understand that Doge is actually going to be really bad and going to cause a recession. Markets are not, I mean, I don't know, that feels very easy for markets to digest. That, oh, we're firing a bunch of people in the government and government spending is going to go down and that's going to be recessionary.
I agree. I think it is easy for the markets to digest. I think that's why the markets are doing what they're doing.
But why didn't they digest it earlier if that's your thesis?
Because I don't think people expected them to go this hard. I mean, there's other things too. I'm not saying it's all just the one thing.
But the cuts aren't that large, like this hard. Like to Haseeb's point, the cuts are not like change like the overall composition of
he's not cutting $1 trillion,
GDP.
right? That's clearly not happening.
I don't think it's going to happen. I think there's a difference between what I think they're trying to achieve and the means they're trying to achieve it and what's going to be the outcome. I think all three of those can be different. My point is just around, again, the perception in the public goes a lot further on a positive side for them if what is bringing down the market is protecting the US's interest in trade versus actually hollowing out this like actual jobs. And I actually personally believe maybe different view on I think he's listening to his people like Besant more than he has in previous administrations. He's still very much himself, his style, his hit people with the shovel on the way in and try and get what you can out of the negotiation. But I've noticed things that are markedly different. For example, not talking about the stock market. Trump is not as savvy.
Going down, right? When the stock market was going up, he was talking about it.
But Trump is not as savvy at some of these more deeper macro principles that only could have come from like someone like Besant. And I think there's other signs that I find more interesting all of Besant's interviews on Bloomberg and CNBC and things and Fox than I do Trump's, because you actually get a less noisy interpretation.
Sure,
and it's pretty transparent.
It's more legible.
Yeah.
Okay. So let's take your theory seriously. Let's walk it forward. If the tariffs are basically all about basically a distraction, right? Like, oh, here's this, flash of light that's going to distract you from the fact that I'm causing a recession through, winding down government spending and firing a bunch of people. Then what is your expectation then of how the trade wars end? Do you expect that, okay, once the economy goes into recession, you walk everything back and then you kind of take credit for unwinding it? Do you think this stays on because he really does believe that we need to fix these trade imbalances? How do you theorize what happens on the tariff side?
So to be clear, I do believe there's intention and what they're trying to achieve, this rebalancing with trade, is there. I do think in tandem. I'm more so saying just the emphasis. They prefer the emphasis on that versus the other stuff. But I do think they are trying to rebalance with the tariffs, and I do think they want. I mean, there's tariffs still in place today on numerous occasions that were implemented his first term that Biden never removed. So that's kind of my point, right? Is if this is such an contentious topic, why were they not removed in the last 4 years? The previous administration, a lot of them are executive action. Biden open the border. He could have removed tariffs. So I do think it kind of calms down. I think there will be new tariffs put in place. I don't think it's going to be 50 in perpetuity. I think it'll be 10, 20, 30, somewhere in there. And I do think he's trying to rebalance things. And then ultimately, I think that they're going to run into issues on the Doge front, as you have alluded. I do think they're trying to get this out of the way as quick as possible. But this controlled burn style mentality is what I would consider it, is going to, in my opinion, run into issues when, take today's Tesla stunt, right? I'm not watching the market. Oh, why are you doing this Tesla show and tell with the car? Well, Tesla stock's down 50% and you feel bad for Elon because he's the soldier you sent out there to go cut all these jobs. And I think the other thing too is we're not seeing any data, unemployment rate, economic official data, that it's all lagging. So like the last jobs report was fine, but all these government workers and such are getting 3, 6, 9 month buyouts and severance. And so a lot of these issues probably don't show up until the second half of the year, or at least middle of the year. So I do think they'll run into issues. I think the market outlook is not great in the immediate term. I do think weakness over, I think a bounce into Q2, but I think it's murky. And there's, oddly enough, the chance that it goes so awry that we do tip into a bigger recession, that then the liquidity response is required to be even larger, which would be the best outcome for crypto, I think, from an asset class price perspective.
Okay, so let's bring it back to crypto. So we've talked a little bit about macro. Why does firing people on government payroll or enacting a trade war and tariffs, why is all this stuff feeding into the crypto market to the extent that it is?
Like we said, the largest producer of job growth in the country the last 2 years has been government spending. And when you remove that, GDP is comprised of consumption, private sector, and government spending. And the government's been spending 6% of GDP annually every year deficit. So it's a very large number that's bolstering the surface level numbers. And whether those are bullshit jobs or, waste or fraud, doesn't matter. It's still income in people's pockets that bolsters market liquidity. It's still 401k direct deposits into the stock market. It's still people going buying groceries and vacations. So whenever you remove growth, it's very negative from a liquidity perspective and needs to be offset by something. And if it doesn't, you see asset prices fall. And so the other thing I think is this cycle, quote unquote, was really boosted off of holdover liquidity from 2021. We didn't have some new GFC we had the regional banking crisis in 23, which kind of helped, but a lot of liquidity that bolstered this cycle, it was sort of a retarded cycle, the crypto retard, but it was not a normal like 2021 style massive global liquidity boom, which I think could come in the next 12 to 18 months if things do go south. So yeah, I think like Bitcoin and some of these other assets majors that are getting adoption on ETFs and traditional vehicles are probably going to continue to be a little bit more stable. But yeah, we need Fed cuts, we need liquidity, we need something to really provide something more than just a bounce going into the back half of the year.
Got it. So we're up on time, so we got to wrap. But if I can summarize, it sounds like what you're saying is that macro picture is bad. You think it's likely to get worse. You think that this whole strategy by Trump is very intentional to try to guide markets down and deflate some of the asset prices that we're seeing in the market. Your prediction then is that crypto is going to really respond to liquidity, and liquidity is only going to show up once things get so bad that the Fed has to step in. And the Fed is only really going to step in if there's significant unemployment or there's a full-on recession, and essentially they need to inject liquidity, cut rates, all of that stuff. So it sounds like, from what I'm hearing from you, not going to happen until maybe Q3 when we start to feel all the effects of this stuff. But long story short, expect more pain for a while, but there's light at the end of the tunnel.
Yeah, I think that's right. And in between, there's some things that can be pulled levers. The Fed does have a good 2, 3, maybe 4 cuts in the realm of normal to get short-term interest rates down to where they would otherwise, given where inflation is at. So I do think, again, I think there's going to be bounces, and it's sort of the stair-steppy, but they don't have 4 rate cuts in 3 months type of deal like they had Q4 that really sent us higher. They have 25 here, 25 there, and it's a lot less impactful to the internal inertia of things.
Understood. Okay, well, with that, we got to wrap. Hope that was helpful in getting an overview of what's going on in the macro side, and we'll be back next week. Thanks, everybody.
Awesome. See you guys.